It's Tuesday and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, Luke Velasco is going to give us a broker update. We also have Andrew Cox here with us, and he's going to give us a shipper update. But first, we're going to go to Zach Strickland with Carrier Update, brought to you by PowerFleet. Stay tuned.
Everyone, and welcome to your Tuesday Carrier Update presented by PowerFleet. I'm Zach Strickland, and it is road check week, which means that we traditionally see some level of capacity tightness throughout the United States, but so far it's hard to discern what's actually happening because of road check and what's the deal with the whole COVID outbreak and the tightness in the market in general, because we are amidst new things in the 2020 environment where we're just not sure what's going to happen next. Well, it looks like capacity and volumes both going up right now in terms of, well, I should say capacity's tightening and volumes are going up right now, which is probably contributing to some of that tightness. So we've got the outbound tender volume index jumping up after it bounced last week as it calmed down a little bit after July the 4th, going over all the way over 12,500, which is a very high value for this index. And then we have the outbound tender rejection index back up over 16.5%. So again, a very tight market for this time of year. We traditionally see things cool off and smooth out during July, and we're seeing the exact opposite right now. So let's check out and see where in the United States right now we're looking at some of the more tighter spots, the most relevant markets to look at. Looking at our weighted rejection index, which combines the outbound tender market share along with the weekly change in outbound tender rejection index change. We've got strong values coming out of Grand Rapids, Michigan, Dallas, Texas, Harrisburg, Pennsylvania, Allentown, Pennsylvania, and you can see all those dark blue markets out there on that map, really showing where some of the tighter markets are, or at least compared to last week. So we've got the Dallas-Fort Worth area continuing to be one of the hot spots in the United States, and surprisingly, Harrisburg and Allentown, Pennsylvania. These are two of the largest markets in the United States, really the hub of the northeastern corridor up there, showing a real strong jump in tender rejection rates over the last little bit. We do have El Paso over there, as well as some spots in the Midwest, looking at St. Louis and also Indianapolis, and then just to north of that, Grand Rapids, Michigan, showing a pretty dark blue value there as well. So these are going to be the areas that you should notice a significant change in the spot market activity. Spot market rates should be going up this week. There will be at least increased upward rate pressure in those markets as well. Some of those red markets, Atlanta, Georgia, down there around Phoenix and Southern California, showing a declining weighted rejection index value, which means that you may actually see declining spot market activity and reduced pressure on spot market rates this week. It doesn't necessarily mean they'll go down, because they are still quite elevated in terms of tender rejection rate in general due to all the, the July the 4th, et cetera, impact, but we shouldn't see an increasing upward pressure in those markets. So let's check out the Harrisburg market. The Harrisburg, Pennsylvania, this is one of the first areas of the country back in March that we saw significant tightness, and it is continuing to tighten right now. But back in March, we were talking about a lot of short haul volumes, a lot of stuff that's moving under 250 miles, going into the metropolitan area, servicing the megalopolis of New York City, et cetera. And now we're seeing a different market where we have tweener and long haul rejection rates driving the charge here. We've got outbound tender volume index combined with outbound tender rejection index over there on the chart, and you can see that volumes are actually not going up, but tender rejections are. And that's due to the fact that we're seeing tightness in certain segments of that market in terms of, what kind of haul are they moving that's going to have carriers reject that freight. And it is a pretty moderate increase in tender rejection rate day over day. So again, starting to see some of this tightness in the northeastern corridor, normally a market that you can't get out of, or an area that you can't get out of. So we can't really tell the direction of where these freight movements are going, but long haul and tweener freight out of Harrisburg, Pennsylvania, a pretty good move in general, especially if you're going up there without something to haul out. Looking at the volumes out of Harrisburg, Pennsylvania, in terms of van and reefer volumes going up, van volumes coming down, but again, highlighted on this little chart right here, tweener and long outbound tender volumes both increasing significantly day over day, week over week here. So those are what's driving the most tightness in this market. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everyone. Luke Velasca bringing you another broker update. So we've actually continued to see volume levels hold very well after the 4th of July holiday. If you notice there all the way on the right, that blue line there, that big dip, that's that 4th of July dip that we're very used to seeing. It's very seasonal. So you can see it's come up to nearly where it was right before the 4th of July, which were already significantly elevated from where we were in 2018. We're still about 15% higher than where we were this time last year, as well as 2018. So volume levels are very elevated and continuing to hold. Now this green line there, if you're doing any reefer freight out there, it looks like reefer volume levels are doing very well and seeing a little bit of an uptick as well. That green line all the way there on the right, it is starting to see an increase again from where reefer volumes were, and it looks like it might even be ticking a little bit above where we were right before the 4th of July. So you're starting to see some increasing there. So that's good activity if you're moving reefer freight. Let's go ahead and look at our money map here. This is the weekly change in tender rejections. Remember, markets in blue are experiencing an increase in tender rejection. That's going to have tightening, and that's going to increase spot market rates. Markets in red are showing decreased activity in tender rejections, meaning spot market rates may actually decline, as well as capacity may loosen up a little bit. Now, that isn't to say that the markets in red are necessarily loose and have low rates. It just means that relative to where they were a week ago, it does look like there is a little bit of softening. So they still very well may be quite elevated, but not quite as much as where they were a week ago. But look at the blue markets here, especially southern Texas. Look at El Paso, very bright blue there. I think we're going to take a look at that later. But all along the border there, there's probably a lot of that's going to be driven by cross-border freight coming from Mexico into the United States. You've got Laredo there as well, seeing a big increase. A little bit there in the center of the country, just east of Kansas, seeing a little bit of activity. And then Savannah, Georgia, seeing a lot of activity as well in terms of tender rejections. Those would be areas I would focus on calling. Focus a lot of your time on the border area there of southern Texas, as well as some of those other areas there like Michigan and Savannah, Georgia, and you should see some good opportunities. We're going to look at the El Paso market today, and El Paso is just going through the roof right now. That blue line is those tender rejection rates right now. You can see we're sitting at almost 39% rejection rate. So shippers are having to find an extra 40% capacity to keep their freight moving on their contract. So a lot of that's going to go to the spot market there. But you can see we had a big run up to the 4th of July. We hit a new year-to-date high, then we dipped, and then now we're right back up with a new year-to-date high out of El Paso. And a lot of that's probably driven by the volume level increase. If you see that green line, volume levels are continuing to push higher and higher out of El Paso, which is going to tighten up a lot of that capacity and drive up those tender rejections. Now remember, tender rejections do lead spot market rates. So when these tender rejections rise like this, you will start to see spot market rates creep up because capacity is tighter. Those carriers have more options to choose from. So keep in mind, when you start quoting freight, make sure you are rising your rates quite substantially, especially day over day, because tender rejections are rising. Now, what's really interesting, this chart, this is El Paso again. You can see the blue line of the tender rejection rates year to date. The orange line is 2019 tender rejections, and the green line is 2018 tender rejections. So only a couple of days ago, El Paso officially surpassed 2018, which was setting all sorts of records for tender rejections and rates. So El Paso is officially tighter right now than it was back in 2018 and well above where it was in 2019. So if you're moving freight out of El Paso, and you moved it in 2018 and 2019, it is significantly tighter than it was in those years. And that'll do it for today's broker update.
Welcome to the Shipper Update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, so we have the Small Business Optimism Index. It jumped 6.2%, or 6.2 points rather, in June. This comes to us from the National Federation of Independent Businesses, and unlike some of the other indices that we look at that are diffusion indexes, where one number above a number indicates growth and the other indicates contraction, this is an aggregate index. It's got 10 components that we will dive into it here in a second. But I want to tell you overwhelmingly that we jumped up 6.2 points. We see that we're still a couple points below that pre-COVID level. Pre-COVID was like 104, 105, so we're not quite there yet. But the overall theme from here was that the small businesses do believe this is going to be short-lived. I think not only that, but they're getting help by the government, so they feel a little bit more confident than maybe they would otherwise. But we can hop into the components here for a moment. Like I said, there are 10 components. 8 of them were positive month over month from May to June. There's really only 2 that I want to talk about specifically, and they are a bit contradictory. So the first is the expectations of real sales higher. The way that this is framed in the survey, so they ask you, do you expect higher sales, same sales, or lower sales? And then they kind of weight it and create a net number. That number jumped 37 percentage points in June, so you definitely see that May was the bottom there. We have a big roaring jump in June. However, when you look at the earnings trends, it deteriorated even further in June. So a bit contradictory there. It's something to think about.
And Andrew, when we're looking at these numbers, do you think this is something that's sustainable, as we're seeing now cases starting to spike up again, California starting to reclose their many businesses, especially service side sectors, restaurants, consumer-facing businesses? Do you think this has any headwinds for small business optimism moving forward?
No doubt. I'm quite worried that we're seeing some false positives in not only this index, but also the consumer sentiment index. Like we said, these are survey-based indices. They take many weeks to prepare, so the cutoff date is usually like mid-June. I know it's the 18th for the consumer sentiment index. I'm not sure what it is here, but in any case, that was when we really started seeing cases and hospitalizations start surging up in the South and in the Southwest. So I am worried that we see a little bit of a false positive. People rush to sentiment, they rush to optimism before seeing the secondary outbreak. And I do think that this number and the consumer sentiment index will likely pull back a little bit when we get that July number here in about a month or so. There's definitely some headwinds. The thing about California is, yeah, you're right, it is mostly service-based industries that are being shut down, the bars and restaurants, gyms, hotels. However, that won't affect the freight market so much, but it definitely will weigh on consumer psyche. We've learned here that there's been a lot of data that it's not even so much the lockdowns that change consumer sentiment, but the fear of the virus. But the lockdowns do kind of insinuate some fear of the virus. So no doubt Californians and across the country, people's sentiment is going to pull back a little bit.
Right, and we're seeing this, as you mentioned, all across the country. Kind of gives a little bit more credence to a possibility of an extension for many unemployment benefits now that more people are unable to go back to the workforce, right? Yeah,
that seems more and more likely every day. We saw Mitch McConnell speak last week maybe about a targeted secondary stimulus package at people maybe under $40,000 a year. We don't know what it's going to look like. I am in their boat. I agree that we're going to need not only those $600 a week extended, but probably another stimulus package. I mean, this is, I don't know how long this is going to go on, but it seemingly we can't get out of our own way. But yes, I do see another stimulus coming.
Excellent. Andrew, thank you so much. Insightful as always. We appreciate it. And thank you so much for tuning in. That's going to do for this Tuesday edition of FreightWaves Now. But the content does not stop here. We're always streaming around the clock. So check out our FreightWaves TV app on all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.